more on the markets, we want to bring in Ed Yardeni. He's the president of Yardeni Research. And Ed, this is a rare time when you're actually in studio with us, but you've got some pretty big calls, so I'm glad you're here to go through some of these. You are lowering your S&P target for the year by about 9% to 6,400 from 7,000 before. It's directly because of what is happening with tariffs right now?
Absolutely, and that obviously relates to valuation. Valuation has been stretched, everybody knows that, but the outlook for the economy was pretty good until we got hit by this tariff issue, and it looks like it's not going to go away anytime soon, so surely valuations aren't going to stay as high, and they have in fact come down. For the Magnificent Seven, they're down from 30 to 25. For the S&P 500, they're down from 22 to 20. So I've adjusted for valuation. I still think the economy is going to prove to be resilient as it has been for the past 3 years. And if that's the case, then the earnings story should hold up, but the valuation story is not as strong.
Directly because of additional prices that might work their way into erode manufacturers' margins?
Well,
or because of an economic slowdown?
Yeah, good point, Becky. I mean, 2 weeks ago, we raised the subjective odds of a recession from 20% to 35%. So, you know, I'm realistic. I look at the data. We are saying that the tariff issue is unnerving consumers, and they are concerned that the price outlook isn't for them to come down. I think the president has scored some good points here in terms of seeing energy prices coming down somewhat. Clearly, the tariffs have worked with regards to pressuring Mexico to deal with the southern border. And another important development here is that with all the turmoil on tariffs, there has been some really good consequences for the rest of the world. China is actually stimulating the consumers, which is what American policymakers have been trying to get the Chinese to do for a long time. And the same thing with regards to Europeans.
Spending more money.
Spending more money. So, which then gets into explaining why the bond yield is so sticky here at 4.3%, because bond yields are going up around the world. So, you know, I think America is exceptional in many ways. One of the ways is we have a lot of debt, we have big deficits, and now the rest of the world is joining us in that regard. So they're going to have some exceptional deficits and debt, and that's actually a positive, at least in the short term, for global economic growth.
And I should point out that 6,400 for the S&P 500 is still a long way from where it is today at 5,600. Yeah. So you're still looking for gains at the year. When do those gains start to pick up? You think we've hit the market bottom yet? Well,
I thought late last year, early this year, that the market would be choppy in the first half of the year. It's chopped us up pretty good. But I think by the second half of the year, a lot of the uncertainties about tariffs, I think there'll be negotiations going on. Some of them will lead to lower tariffs instead of higher tariffs. And I think by the second half of the year, we'll see the economy continue to prove its resilience, earnings hanging in there pretty well. And so I think the second half is when the market moves ahead to new record highs.
I mean, theoretically, most countries that still have large tariffs against us or levied on us are not in a position to pick a fight. With us. And the reciprocal deal, the end result could be some of those tariffs are either cut or taken off completely.
Exactly. And I think that's, you know, I mean, it's conceivable that the market is bottoming now, anticipating all that, because everybody knows that you don't want to go long in the market, or you don't want to be buying when April 2nd, we're going to have a slew of reciprocal tariffs, and the president will be talking about them. I've observed of late that any day where the president doesn't talk about tariffs is a good day for the market, and that's why Friday was up, because he wasn't talking about it. But I'm also saying that despite the fact that he's continuing to hammer home the tariff issue, the market is down some today, but so far it doesn't look like it's going to be a terrible day.
We should, any USMCA compliant things we should not tariff, we should not put on, and we should renegotiate. If he wants to renegotiate the USMCA, it should be renegotiated.
I think
and then the reciprocal tariffs, put those on. Well, China, we got issues.
Yeah, but that's the uncertainty. The uncertainty is he using tariffs as a negotiating tool to bring tariffs down?
Right.
That would be very bullish, because
We've
we
heard
do
a lot
have the
of-
power to do that.
Yeah, we've
Or
heard
if you listen to Peter Navarro, is it to raise revenue?
Yeah, and that's delusional, if I may be, very honest about what I'm thinking.
Right.
You just can't you can't replace the income taxes and the corporate taxes with imports duties. It's just not going to be enough to do the trick.